Hello, I'm Dan Sweeney, the Director of the Institute for Enterprise Ethics here at the Daniels College of Business on the University of Denver campus. I am pleased to present the fourth edition of the Institute's Quarterly Ethics Review. This program features several outstanding faculty members from the Daniels College of Business discussing a number of the most interesting and widely reported stories from the world of corporate ethics and responsibility from the previous 3 months. In this session, we will talk about the gender discrimination issues in Silicon Valley. We will talk about the Starbucks Race Together campaign. We'll talk about the payday lending industry and the minimum wage and on-demand workforce issues and several other important stories. My colleagues for this discussion are three outstanding members of the Daniels Business School faculty. Dr. Doug Allen is Associate Professor in the Management Department. Ruth Jebby is Senior Lecturer in the Business Ethics and Legal Studies Department. And Ali Besharat is Assistant Professor in the Marketing Department. So colleagues, let's get into it. So Doug, recently, Ms. Ellen Pao lost her gender discrimination suit against Kleiner Perkins Venture Capital Partners in Silicon Valley. The case was brought by her alleging that she was denied a promotion because she was a female. Meanwhile, the sexual harassment and sexual discrimination cases are still going on in Silicon Valley on Facebook and Twitter and Tinder. Why is this all occurring kind of now and in this place, Silicon Valley, presumably the home of the ultra with it high-tech meritocracy?
Mm-hmm. Well, why not, is what I would say to that. Silicon Valley is famous for technical innovation, but not particularly well known for social innovation. Occasionally, organizational structures are of interest to take a look at. I think there may be several possible explanations. You have young, predominantly male entrepreneurs who may not have been trained in diversity by either their families or their schools, and as a matter of fact, they may not have been trained in systematic business approaches. And both of those, either one represents sufficient reason to expect to have trouble in the companies they represent. According to a diversity expert in Silicon Valley, a firm can aspire to be meritocratic or inclusive, but that requires real work, including an earnest examination of workplace culture that can be inadvertently biased. And we see a lot of evidence that not a lot of effort has been put into this. Silicon Valley is famous for its frat house culture and the tech bro kind of behavior, as well as the Dave rule. The Dave rule is simply the rule that you have gender equality if you have as many women on the team as you have men named Dave. And so with those kinds of jokes floating around, you're in some trouble. I think that you can look at that individual level of behavior as well as a more institutional level of behavior. We find that businesses having all male teams are more than 4 times as likely as companies with even one woman to receive funding from venture capitalist investors. In a recent research piece, Babson found that 6% of venture capital partners were women, down from 10% in 1999, and yet those companies with VC female partners were twice as likely to invest in female companies and 3 times as likely to invest in female CEO-run companies. And so you have a lot of evidence that there is sort of institutional level discrimination as well. Perhaps women are just not as effective as men, though, we could say. Well, the research shows the opposite, that companies with the highest proportion of women board members outperform those with the lowest proportion. Companies founded by women are more capital efficient. Female-founded startups have lower failure rates, and VC-backed companies founded by women experience a 12% higher rate of return. So that one doesn't really work as an explanation. I think moving forward, and maybe where this conversation could lead, is looking for solutions and approaches that might help us as we consider this issue. The good news is that aside from ethical considerations, the talent shortage is going to force people to begin looking more carefully at people from many different backgrounds and both genders as well. There's nothing like a talent shortage to discourage discrimination. And we can find that, as an example, Salesforce, the company's CEO, Mark Benioff, who announced that he would review Salesforce salaries and award raises to women who are making less than their male colleagues, just spontaneously, to be sure that they would eliminate any kind of gender pay issues. Family-friendly policies are becoming more prevalent, flex time, job sharing, and maybe truly honoring the Family Medical Leave Act and other kinds of things like that. And as a matter of fact, taking it full circle back to Ellen Pao, she is now the interim CEO at Reddit, and she's announced that they will no longer negotiate salaries as people come into the organization. Research shows that women are less likely to negotiate tough salaries, and so oftentimes inadvertently companies develop multi-tiered pay scales based on simply that tendency. Women who negotiate are perceived more negatively than men who negotiate, and so you lose twice in those kinds of things. So why Silicon Valley? I'm not sure that Silicon Valley is more guilty than other parts of our society, but I am certain they're not less so. And the challenge moving forward, in my mind, and we'll see what others think, is to really begin seeing how we can eradicate these forms of discrimination for the good of the individuals as well as for our society.
I would like to make a comment on that. Great overview of the industry, but putting label in terms of gender discrimination for Silicon Valley may not be a very correct term for that industry, because even like women outnumber men in different industry. Look at business, look at medicine, look at law. But when you come to the tech industry, we have only less than 5% of women that they have, they work in this industry, and less than 2% of them, they have the tech-related degrees in that discipline. So is it because of our education system that we don't train enough, let's say, self-confident women that they could go to this industry and they could do well? Like Marissa Mayer, that all of us know about her, but our education system, basically, we have lack of talent. That's why Silicon Valley cannot hire those people that they need to be represented among women to have like equal opportunities for both genders. I just open up this for the panelists.
Yeah, I'm really interested in this conversation sort of at the institutional level. And that's probably partly because I'm a lawyer, so I think about things from an institutional level. But it raises the issue for me in terms of, so what do education institutions do? So we know that this is happening. We know that we probably made some progress, but not lots of progress. So what do we do, for example, as a business school? To help educate our students before we send them out into those VC jobs or out into those corporate jobs to think about these issues in a really constructive way. So for example, as we're putting together teams for team projects, you know, do we actually think about the dynamics, especially the gender dynamics in the teams, and do we actually have conversations with the students? I know that I'm at fault for not really addressing that issue with students and having those conversations to get that issue onto the table. So maybe we need to think about, you know, pulling back the camera and thinking about our role as educators in trying to prevent some of the horrible symptoms that we're seeing out in Silicon Valley. I don't know.
Well, I think that's a very important part of the puzzle, is to figure out how we prepare people who are heading out into the field. For me, one of the discussions I have in my classes is how the U.S. is perceived to be a leader in the field of gender equality, but is actually not so much once you begin looking at the statistics, whether it is as a country being a signatory to some of the United Nations treaties that prohibit discrimination against women, or whether it's the actual legal structure that begins to encourage more family-friendly policies in the organization, or whether it's the behavior of individuals, as we've been talking about as well. And so, you know, it's not uncommon for some students to say, well, that was something that was a problem a generation ago, but our generation is different. I think there's a lot of evidence that it is not so different, and so it is an issue that needs to be continuously addressed, not just, by the way, gender equality, but also racial equality and a number of other important issues that creep up in the workplace from time to time.
And I think that, I mean, even though she lost at the court, it kind of opened up the whole area for discussion of whether it's fair or not, and whether women are underrepresented in that industry or not. So I think that was worth it. So that's why you got a lot of media coverage. So probably she was the winner if you wanted to test that in a public opinion setting as opposed to, you know, court kind of setting.
Well, there's no doubt she was a very courageous woman to actually bring the suit against a firm like Kleiner Perkins. So cheers to her. Thanks. Great conversation. Ali, so late in March, Starbucks CEO Howard Schultz, under heavy criticism from segments of the public, the coffee-drinking public, and from some of his employees, announced the end of the most visible component of the company's Race Together campaign. This was the effort that encouraged your favorite barista to engage in conversation with you on the sensitive topic of race relations while you're ordering your latte. This is not the first time Schultz has taken on an important social issue as a corporate cause. So here's the question. Do you think large public corporations, well-known public corporations like Starbucks, have a right, much less an obligation, to promote such causes that happen to be pet projects of the CEO?
That's a great question. I would like to just give a little short background about supporting social causes. So most companies, they have two routes for supporting social initiatives. One is corporate social responsibility, that either they provide funding or resources to support certain causes, or the other method is improving their own products or processes to help the environment and sustainability of the environment. But the problem is they're reaching a point of diminishing return. And they cannot be as profitable with those initiatives that they used to be in the past. So people either they don't notice them or their effectiveness are gone away. So companies try to shift gear and move toward more other initiatives that I like to call them corporate social advocacy. So their intention has nothing to do with their core business. So they're trying to take a stance on controversial social issues. It has nothing to do with their mission or their core business, but they just want to make a statement and go viral. Because there was a survey that has been done recently by a Global Strategy Group, and they found that in 2015, 56% of consumers preferred the brands actually to take a stance about different social issues, even though being controversial. So it shows that a lot of brands are moving toward that direction, even though they may lose some of their potential segments, because obviously not necessarily everyone in the segment are going to agree with those statements that the CEOs may put out there. But obviously some other customers may give credit for this kind of brave and motivated social initiative that they launched. And it's so interesting. I was looking at Huffington Post 2014 report. 27 major companies actually supported this corporate social advocacy only for same-sex marriage in the last year. So it shows that a lot of companies are moving toward that direction because they want to get noticed, and customers want to also identify themselves with those brands. I mean, they see them as a citizen. They want those to make a statement. It's not just saying that, okay, I'm great, buy my product, but I'm taking a stance about this subject, and I want to stand with me with this subject. So I think that the intention of Starbucks, going back to your question, I think the intention was very good. I have some issues about the execution of that initiatives that we can talk about if the panelists they have any comments to add to that, and we can come back to it.
Well, I think one of the issues for me is if you think about how do you actually get, for example, the employees of the company to buy into this cause, I think to the extent that it is a pet project of the CEO, to me that seems problematic. In terms of execution, and clearly I think that was one of the issues with Starbucks. Ali, maybe you can speak to that as well. But also in terms of, how do you actually build a culture within the organization that is supportive of social initiatives? It's not by top-down imposing your view on your employees. It's by finding out what's important to them, what's critical to them, what matters in their lives, and then percolating up from that what those initiatives should be. So, my issue with it is sort of Howard deciding this is what we're all about, not finding out what Starbucks should be all about.
And it's so funny because one of the executives, as soon as they launched this campaign, so a lot of people got upset because they thought that this is not a topic that you could discuss over a cup of coffee with a barista, and they were not comfortable, during that transaction. And so one of the executives' Twitter accounts was flooded with a lot of negative comments about this initiative. So he decided to shut down his Twitter account, which actually kind of backfired. And people say, okay, if you launch these, initiatives, and after 2 days, one of the executives shut down his Twitter account, it's not a good sign that you're all committed to this cause. Going back to.
So I would add, though, that I would differentiate between the concept of a company taking on an issue and the analysis of the execution in the case of this particular example. Howard Schultz actually visited the University of Denver about 2 years ago and made a very interesting point. He said that, with limited governmental budgets these days and also just a decline in societal involvement in a lot of these issues, it was increasingly on the shoulders of companies to kind of take up the slack and make up for some of that. And so I think that there's a fine line. I totally agree that you want to build the culture within, but also at times you may want to initiate issues that can be embraced by the broader set of employees. And so for me, it's not a clear-cut case where it can only be something that is building the reputation of the company. At times, I think there's a legitimate need to take a stand.
Right.
At times, those two come together nicely, and taking a stand builds the reputation of the company. Those are kind of no-brainers. The tougher question, and here I think is really where what I call social responsibility, is where you take a stand even when it may be contrary to the short-term needs of the organization.
It seemed to me that a guy like Howard Schultz, whom I have great respect for, has so many passions about so many social issues, it would be hard to pick one that's not a pet project of his. So,
That's probably true.
Excellent, another excellent conversation. Thanks a lot. We've got a question that came up from the audience, Ali, and it was regarding something that you said with regard to companies who invest in social causes that are kind of at the core of their business strategy as well. Could you give us a couple of examples of that?
Yeah, I have two that comes to my mind. One is Hotel.com that has started supporting a social cause to force the government to give the minimum vacation days to their employees so they could go on vacation, and these are the requirements. Another example that comes to my mind is the brand Always, that they try to take a stance against discrimination toward girls. And this is kind of tied with their core business. So they're in the same business, and this is important cause for them to support.
Starbucks itself is actually engaged in cause-related initiatives as well. If you think about the way that they construct their supply chain and the way that they work with coffee bean farmers to actually adequately secure that supply of coffee beans, but also to make sure that the farmers have living wage and can make a go of their farms. So Starbucks itself has actually worked at causes that are directly related to its core business.
And you could add to that Starbucks' approach to their employees. Recently, another controversy was the fact that they just extended their tuition reimbursement for college from 2 years to 4 years. And under sort of an aggressive interview, Howard Schultz was asked, what about your shareholders? Don't you owe some of that tuition to the shareholders? And Howard Schultz's answer was very interesting. He said, I think we absolutely take our shareholders very seriously. We're a company with a market cap, I think he said, of about $70 billion. He says our shareholders have done very well, and we need to share some of that success with our employees, which comes back to help Starbucks in a number of ways. They have, I think, a turnover rate of about 30% compared to other fast food chains that sometimes experience 100% or even 300% turnover a year. And you notice the difference when you go into a Starbucks. They set the scene for employees who are ready to serve.
Yep. Ruth, over the past quarter, a great deal has been said about and written about low employment rates, low minimum wages of underpaid and underemployed workers. and about the rise of on-demand workers with such companies as Uber and then Amazon Mechanical Turk. Meanwhile, in reaction to the increased need for entry-level workers, companies like McDonald's and Walmart and Gap and others have independently raised their entry-level wages. Now, this employment situation does not seem, at least to me, to be a very rational way to build a viable and stable employee base for an economy, especially one the size and scale of ours, nor does it appear to be an effective way or a fair way to organize a workforce. So there's not really a specific question in here, but I'm really curious about what the three of you think about this situation that we find ourselves in.
Well, let me start by saying I'm conflicted about the situation. So I'm going to spitball out what I think are maybe some of the issues to think about as we think about what's going on with the way we construct workforce, and then hopefully Dan and Ali, you can help us, or Doug and Ali, you can help us think it through. I think to start with, on the Walmart issue, it's pretty easy, I think, to look at Walmart and see them as a free rider on the social contract between them and the United States government. Their low-wage workers are essentially being sort of subsidized by government stipends because they're not making enough money to actually live on. So I think at the low end, it's pretty easy to see that there's still a fair amount of regulation that's needed to help those workers. Regulation in the labor field is based on unequal bargaining power between employer and employee. And we may like to think that that's been eradicated, and in some areas maybe it has been, but there's still a lot of folks that cannot adequately protect themselves in the workforce. And they need the protection of government. That's where government steps in. So I think, we need to rethink minimum wage, for example. We need to get really serious about what does it take to actually support a family in this economy. And we need to make sure that folks have that. The other part of it, though, I think that's kind of interesting is to look at what's going on with how we define the workforce and how we define the labor force. I came of age in a generation where the labor force was really built around, sort of paradigm, stereotypical American family. 2 parents, dad worked, mom took care of the kids. And we built our concept of what the workforce should look like, I think, based on that sort of social paradigm. But we have different social patterns now as well. We have different kinds of families, and we have different people with different kinds of needs. So I think think about the effect of Uber, the effect of TaskRabbit on that low-wage workforce. Are they actually luring employees away from Walmart? I think that's a really, really interesting construct to think about. Is that going to force Walmart to have to become more competitive in terms of their benefits and their compensation? But at the same time, you look at these companies like Uber, like Lyft, like TaskRabbit, are they providing opportunities for workers who cannot find a place in the traditional workforce? So think, for example, of stay-at-home mom, stay-at-home dad who left the workforce for 6 or 7 years to raise kids. Kids are now in school. Mom or dad can go back into the workforce, but they still have to be home by 3:30 in the afternoon, and the workforce can't accommodate that. But TaskRabbit can. TaskRabbit can make that work. So, one of the issues I kind of see in thinking about our workforce is I think there are folks there's talent that's been left on the sidelines. And maybe these entrepreneurs are finding ways to bring that talent back into the workforce. So I don't know, I'd be interested in hearing what others think about this. For me, this was an issue that I had not really thought about very closely.
Yeah, I think I see those second group as like independent contractors, that they come up with their own time, come up with their own schedule, and also they can decide how they're going to get paid. Like even Uber drivers could decide whether they're going to drive during the rush hour or after midnight, because the rates are different. Whether they want to pick up someone in front of the stadium or they want to take someone to the university. So again, the rates are different, and the flexibility, obviously. The problem that I have with this structure of the payment is if you're working under name of Uber or Lyft, are you supported with that company? Do you get the enough benefits that you deserve from that company? And if you don't, then there's a problem. because they could take advantage of you, they could abuse you. There are a lot of complaints about Uber nowadays because they say that if you have ratings less than 4, by default you're going to lose your job. And they never look into what happened that actually you earned 4 out of 5 in some cases. As opposed to that, they just get rid of you and ask someone else to take over.
It seems to me that we're right on the cusp of needing to totally rethink the concept of employment. And that has to do with the policies and the legal structure, as well as the relationship between employer and employee. On one hand, we need to have regulations and laws that prevent exploitation. On the other hand, we need to recognize that some of these new structures are offering opportunity to people who may not have had opportunity in the traditional economy. And so how do we balance those two values of opportunity and avoidance of exploitation? It seems to me that if we go back 100 years, we would find that the United States had about 70% of the employment in the agricultural sector. And if we were to say to those people at that time that if we fast forward 100 years, it's between 2 and 3% that are employed in the agricultural sector, we would have said, where are all the jobs going to be? And yet, in the same context, we have under 6% unemployment by the current measure of the government, even though we have these new technologies that have radically transformed the way that we work. What we need to do is catch up with these technological advancements so that we can take advantage of the benefits they offer without allowing some unscrupulous people to take advantage of the employees that will be part of that system.
You know, the interesting part about that too, I think, is it has not to do only with technology, but with business models. So you see, even in the on-demand, you start to see different business models. So Uber and Lyft work very differently than TaskRabbit. You know, TaskRabbit is much more about, I'm going to help you build your business, independent contractor, and I'm going to provide you some of those safety nets that you would have access to with a traditional employer. And so I think we're starting to see that on-demand economy sort of identify, so who's the market segment to drive for Uber? That's going to be different than those who work for GigWalk or those who actually work for TaskRabbit. And so I think you're starting to see different business models there as they respond to the needs of those workers. And I think, for myself, I think that's hopeful. You're starting to see a little bit of flexibility and some real thought. You know, the issue with Uber and Lyft and the other folks who have been involved in lawsuits, I think, unfortunately creates a gray area for this industry as well, because it's not entirely clear legally how they need to operate. So if you're an entrepreneur thinking about how to move into this space, you have some strategic decisions that you have to make in a context of uncertainty. Yeah, so I think some really interesting stuff happening in the field of employment.
I think just one other thought is the assumption about where the benefits come from may be something that needs to be re-examined. Right now, one of the reasons that you go for contract workers is you're not responsible for providing the benefits that are there, which provides a great competitive advantage over companies that do have to deliver those things. And so the debate is kind of framed around there, whereas I think maybe a broader societal debate comes in and says, is the employer really the place that should be providing those benefits, or should it be through various other kinds of institutional mechanisms more similar to what we see perhaps in the Scandinavian countries, a much thicker social safety net that makes employees much less dependent on the benefits they would receive from employers.
And also the transparency in sharing economy. Like a lot of users or drivers who sign up for Uber, for instance, they think that they're going to make more money by using actually this service as opposed to getting a full-time job with Walmart or Target. But they never take into account the cost of depreciation and maintenance and gas. So even though the rate of pay for Uber has been promoted to be $19 per hour, so you can say you make 19 hours, but when you take out the maintenance and other costs of the depreciation of your asset, probably you make around like 8 or 9. So a lot of people have like short term for quick cash kind of view of this business, but in fact actually they may sacrifice the potential health insurance or other like perks that other full-time jobs may offer that these contractors may not ever receive from Uber.
Yeah. I think, you know, the other point too is, you know, we're all business folks, right? So you think about, you know, when something new arises in the marketplace, that's usually a signal that there was a gap, right? That there was a need that needed to be filled. And so, you know, maybe we think about the sharing economy as, so what's the need that it's appealing to? Because if it doesn't fulfill a need, it will go away. But that is some signal that there's something wrong with our current employment system. So.
and there appears to be something very right from a customer or consumer standpoint of these new businesses. So we'll have to wait and see.
Mm-hmm.
Great conversation. Thanks. Panel, late in March, the Consumer Financial Protection Bureau proposed new regulations to rein in the short-term, sometimes called payday loan industry. Companies in this industry offer short-term, low face value, high interest rate loans to consumers who are badly in need of cash but have no other source of credit to go to. Even though the borrowers are truly in need of the cash, the loans are almost always considered predatory because of the high interest rate and the high likelihood that the loans will be rolled over a number of times, resulting in an enormous debt. The question for you is how can the industry, the payday loan industry, the large industry, and the Bureau come to some kind of agreement or compromise that provides a source of needed credit for these consumers, but does not take unfair advantage of their circumstances?
I think that issue is very similar to the question about Uber and such, that at the end of the day, we have a need for the opportunity for people to access quick loans from time to time to address emergencies. On the other hand, we want to be sure that we avoid exploitation of some of the poorest people in our society who are most likely to be taking advantage of those services. And so I don't have specific insight into this from the standpoint of what would be the appropriate loan rate of return or anything. There's the issue of risk, and people need to be compensated for risk, but I think maybe that's another societal assumption that needs to be re-examined. Do we always require the highest rate of return from the poorest people? Somehow that just seems very perverse. We see that same thing in the context of multinational investment. The highest rate of return is demanded from the emerging markets that oftentimes are the poorest locations in the world. So that whole paradigm may need to be examined, but at the same time, we want to not throw the baby out with the bathwater. At the end of the day, there is a need for access to capital, and there is a need to compensate the people that are providing that capital in a fair way so that they can do this in a way that meets their expectations as well.
Yeah, I think, so when you look at this industry, I was thinking that because the interest rates are very high, I was assuming that it's a very profitable segment of the industry. But in fact, they're not, actually. When you compare them to the regular mortgage or loan facilitator in this industry, actually their return on investment is really low. So they have an average of 7.6% return on investment, and the mortgage industry and the loan industry is typically 13.4. So actually it's relatively non-profitable compared to the rest of it. But I think the notion of having high interest rates and the segment who are borrowing from these sources not knowing the numbers, so the financial literacy, I think, is a very critical issue that they have to educate consumers. So at least there's a sheet that they could put in front of them that if you default on this loan for 3 times, you're not going to even be able, based on your paycheck, what you showed me, that you're not going to even be able to pay off that principal. You just keep paying the interest rate of the loan that you borrowed. And in terms of the regulation, I think government should step in and provide some guidelines. Say, okay, the maximum amount of loan that you could take out should be, for instance, $500, and you cannot roll out more than 2 loans a year. So at least you know that if they are defaulting or rolling over to a new loan, there's not going to be a 3rd loan, because there's no way, based on the financial capability of consumers, to pay that off and be able to get over this loan. So I think this is very critical for government to educate consumers in the first step, and also put clear guidelines how actually consumers could take out these loans, and hopefully they could pay it off by the end of the year.
So I find this phenomenon kind of fascinating too. It sounds like the high default is one of the real issues with this sort of category of folks. So I wonder, I was thinking about this as you were talking about interest rates for multinationals and emerging economies, Doug. Are there lessons to be learned from our experiences with microfinance? As we think about how microfinance institutions have worked to develop mechanisms to prevent default, so that they could then lower, as their risk went down, they could then lower the interest rates. assets. And so maybe we need to really think about how we lend money really quite differently than we do at the upper end of the economic scale, and take some lessons from, Grameen Bank and from some of these other organizations that have had some success in lending money to those at the lower end of the economic spectrum.
And also the pre-qualification requirements for these types of loan. This is another thing that unfortunately a lot of lenders, they're not picky about it because actually their profit is there, but they have to have some pre-qualification. So do you have a title for your car? Do you have a property that in case you default, you could sell that property? Or do you have like an asset that you could, hopefully pay that off? But unfortunately, they just give away these loans, and like consumers, unfortunately, that segment in the market default, and you know what happens? They keep rolling this debt over and over.
It seems to me that some of the measures that the Consumer Financial Protection Bureau is proposing, which you've laid out, could at the end of the day have a positive effect on the industry, because it will put discipline on their pre-qualifications, on the size that these loans can get to, the number of them they can take. So they'll be forced into a much more disciplined way of doing business.
And one of the reasons the profitability of this segment is not high is because the default rates.
Right.
And a lot of customers could not pay it. So the interest rate can go up to 400% APR, which is unbelievable when you consider the annual part of it. But if the government steps in and they provide some guidelines, obviously the risk of those investment goes down, so they could get their money back, and probably it's going to help the industry. So not only the consumers, but also the industry, to make it more vivid and active.
So how in the world do these interest rates get up to 400% per annum on a single loan? And given 400% per annum, how come these payday loan companies only generate 7% as a return on investment? How's math work?
Yeah, because when you think about the traditional interest rates or APRs, they're on an annual basis and they're on compound basis. So every month you default, it accumulates interest, and then you pay interest on top of what has already been accumulated. But when we think about this type of loan, the payday loans, so it's tied to your monthly payments. So every month you have been charged certain fees. So if you borrow like $100, then there's a $15 fee. If you borrow like $200, it's going to be $30 fee. And as soon as you default on that loan, so for the first loan you cannot pay it off, that amount has been added to the first principal. And then you add an additional fee on the money actually that you're responsible for. So from that aspect, that's why we get the 400% interest rate, because it's compound and is on monthly basis as opposed to the annual interest rate. But from the standpoint of why it's not profitable, 7% versus the norm of the lending industry being 13%, is because of the default rate and the risk assigned and associated with this type of industry. Like almost like 60% of people who take out money, they cannot pay that loan off. So they keep defaulting, and the lenders obviously cannot get their full money back. And that's why we have the 7% return on that industry.
I think two other quick points. One is that these are very small-scale loans, and so the administrative costs associated with that loan is amortized over a very small amount of money, as opposed to a mortgage for a $400,000 house or something like that. And so the cost structure for these loans, like in the microfinance industry, are much higher per dollar loan than you'd find in other circumstances. On the other hand, I still do not doubt that there is a predatory aspect to this industry. And I also seriously doubt that the true return they're experiencing is as low as 7%.
Well, but the fact remains, though, that this loan goes out, and as Ali explained, it grows up to 400%. Nothing has been paid back, and then within a few months or maybe a year, the loan is this huge loan, then it's got this 400% rate on it, and the borrower defaults. So the lender doesn't get the 400%.
Right.
Correct.
It's the worst of both possible worlds,
Exactly.
right? Another question for whoever wants to take the lead. On April 5th of this year, Nicholas Kristof of the New York Times, columnist of the New York Times, wrote a column about a recent Princeton philosophy graduate who took his ethical obligations to society very seriously. Yet, he took a job as an arbitrage trader on Wall Street. And so Christoph was curious about this. In Christoph's words, quote, "That's because he took a high-paying job in finance so he could contribute more to charity." Sure enough, in 2013, this trader donated more than $100,000, roughly half of his pre-tax income, to charities. Well, in my view, this is surely an interesting case to just contemplate. What thoughts does it bring to you regarding ethical and responsible behavior on Wall Street? You choose.
All right, I'll start. So when I first read about this young man and read Christoph's article, there's a part of me that again sort of goes, yeah, give away that money, donate to charity. The question that it raised for me though is, do we rely too much on charitable donations to try to fix social problems in the world? And can we donate our way out of those kinds of problems? I would argue not. And what I would love to see this young man doing is living his ethics in his job, making sure that as he's trading on Wall Street, he's actually trying to be that positive influence on the industry, that he thinks about what's the part that the financial sector plays in contributing to those problems and what can he do about it. And then, thinking more broadly about what are the sort of systemic causes of the problems that he's donating to sort of Band-Aid. Yeah, give away the $100,000, but don't forget we have to look for root causes. The $100,000 isn't enough.
I actually don't see any conflict in this case. I think it's a false dichotomy to say that we either have to be of service or work on Wall Street. I think I would prefer to see an ethical person on Wall Street helping to influence the culture there and maybe trying to change the overall approach that is there. And so we don't know what he's doing in his job, but I'm open to the possibility that he's actually having a beneficial impact on society in the context of his job himself. What he donates to charity is another opportunity for service. What he does in his free time is a third arena. And so I think that oftentimes we make false dichotomies and we say we either have to be of service or we have to do our job, or we have to be good to our family or good to our job. We have all these different kinds of dichotomies that we create. And as we move forward, we really need to begin thinking in a more coherent way about how we live our lives and how society expects behavior out of its citizens that really allows opportunities for service in all arenas.
Yeah, I have two concerns in this case. I shouldn't call them concerns, just quick comment about this. One is the opportunity cost, as you mentioned. What if he would have invested this $100,000 on something else or set up an account that actually after a couple of years it's going to grow and it's going to help more charities or more causes? So that's one opportunity cost issue that probably he did it just because he's new there. He started his job 2 years ago, so he's learning that probably in the future he's going to have a better long-term perspective over there, or he just want to make a buzz about himself that, this is my philosophy and that's why I'm doing it. The second thing is the charity of choice. How do you choose those charities? Do you go with the one that actually is close to your heart and you think has the highest impact, or do you go with the one that publicly people think that it's the most rewarding one, and in terms of the impact is more powerful than your charity of choice? So it goes back to actually whether choosing a charity is better, more impactful, or actually being given a charity by someone else or by public actually might be more effective. So we can have that kind of conversation about that topic too.
My reaction to this was that my preference would have been to see him take that $100,000 this year and maybe $150,000 next year and so on, and invest it in one of his firm's hedge funds and leave it in there cranking away for 5, 6, 7, 8, 9, 10 years. And then by that time he could maybe pull out $100 million and do something of real substance with that. So I agree. The $100,000 is a lot of money, but when you're trying to cure healthcare or poverty, you know, it's a nice token, but that's kind of what it is. And
I think, though, that, for me, we're micromanaging this guy too much. I mean,
Probably so.
I think
Yeah, but he's a kid,
I'm
Doug.
going to give him I'm going to give him the benefit of the doubt and assume that he is motivated to do some good, and there are many ways he could do that. Charities need donations now as well as in the future, and there is also the opportunity that you could create a nest egg and make some kind of bigger impact later. I think we need both short and long-term kinds of orientations, and I would prefer to see everybody really looking for their own way that they can be of service and validating every one of those ways as very true and valuable contributions to society.
yeah, I didn't mean that as a criticism, but I just happen to be a guy who likes scale.
Yeah, yeah,
That's all.
and scale is very important.
Okay, good.
Yeah.
Okay, here's a new question. It's new because the issue just appeared last night and was reported in the papers this morning. It's Deflategate. And the issue we want to bring up here has to do with the general culture that we find in NFL teams and maybe throughout the entire NFL. The New England Patriots were found more likely guilty than not of deflating their footballs during the run-up game to the Super Bowl. There's some evidence this is a cultural thing because the Patriots are known for pushing the edges of things. Just like the Miami Dolphins and their toxic locker room culture ended up in a young man leaving the team and leaving the sport. And it's just like the New Orleans Saints a number of years ago with their bounty on driving opposing players off the field by injury. All three of these issues are cultural in those organizations, the toxic cultures in that organization. So the question I might pose here is there something about this sport? Is there something about this league? Is there something about this whole activity of young men behaving badly that needs to be addressed through kind of an ethical lens?
Yeah. So, you know, I read only the very first sort of news headline that came out last night, so I'm probably underinformed on this. But for me, it raises a couple of different issues. I think one of them is this really broad issue of what we as a society and as fans are prepared to let professional sports franchises and professional athletes get away with. I think we love as fans to sort of become irate in the moment and go, yeah, damn those Patriots. But then we tend to forget, right? Once training camp starts, all of this is going to go away. No one's going to be talking about Deflategate anymore. And that, I think, allows an unethical culture to persist because we don't root it out sort of at the roots. I think the other part of it that's interesting to think about with regard at least to the NFL is sort of what's the regulatory structure over the NFL? What's the role of the commissioner? Could the commissioner be doing more? He was on the hot seat over the last couple of years as well with players who were accused of domestic abuse and child abuse. And did he do enough? Did he have appropriate processes? So the NFL regulates itself to a huge extent. Is it doing what it needs to do to adequately regulate itself? I would say, yeah, no. The commissioner needs to step up his game.
I think this goes back to our very first question, the issue of the Silicon Valley culture and the tech bro sort of thing and what is acceptable and what is not. Our society seems to give a pass to certain kinds of people for very, very objectionable behavior that normal citizens would not be allowed to engage in. My very rudimentary understanding one day out after the release of the report is that they say the preponderance of evidence shows that not only were these balls deflated purposely, but that Tom Brady was part of the deal. I've said throughout the investigation that if it was proven or shown that there was institutional support for this, then the Patriots should lose their title as Super Bowl champions. And that's what I would say is appropriate at this point. Even if there wasn't the institution of the company behind the team involved with this, I think Tom Brady is close enough to the top that he sets an example for the entire team, and nothing less than removal of the title and a very severe sanction for him should be the result of that. Because if that does not happen, that sends a signal to everybody in society that cheating is okay. And that gets us back to Silicon Valley. A little discrimination here and there is okay, or it gets us back to some of the other issues that we've talked about throughout this hour. We absolutely have to look at the choices that we make as setting precedents for the behavior far beyond the incident itself.
When we were doing the conversation about the Miami Dolphins, one of the one of the observations that came up was professional football is inherently and naturally an extraordinarily violent activity. And with violence comes the degeneration of order and discipline and regulation. And so we kind of ought to expect violations of what would otherwise be natural human behavior, standards of behavior, because these are young men in a violent game.
If that's true, then we need to get rid of football.
That's right. And hockey.
We ought
And
to
a
start
bunch of
playing
other
soccer,
sports,
right,
that's
Ali?
right.
Yeah, so a lot of problems.
I mean, and I think there's a difference between what we can expect, if you look at cause and effect, and what we're prepared to tolerate, what we're prepared to accept. Those are two different things in my mind.
Well, my expectation, and we'll find out whether I'm right or wrong pretty soon, is that the family that owns the Patriots and the coach Belichick, and maybe even Brady, who has not turned over his cell phone yet, may have plausible deniability. You still got this young man, part-time employee, only works home games, who actually took the balls into the bathroom after they were tested and brought them back out. So I think I have a good idea where this one's going to end up. Anyway, good ad hoc responses. We got some good perspectives on that. Thanks.